The financial system is being rebuilt from the ground up right now. Most people have no idea it's happening, and by the time they figure it out, the window will already be closed. Let me take you back to 1998. You're a professional trader at a mid-sized firm in New York, good track record, you understand the markets, you're doing everything right, but something's off. Your returns are quietly getting worse, not dramatically, not all at once, just a little bit worse. And trades that used to work aren't working the same way today. You can chalk it up to a bad quarter, you're pushing harder and harder and harder, and you don't know what is going on somewhere on Long Island in a strip mall where a team of mathematicians, not traders, just mathematicians, built something that has never existed before. It's servers sitting inside the exchanges themselves. Algorithms are firing thousands of trades per day in microseconds. Not predicting where the market is going, just seeing the order flow of a fraction of a second before it settles and taking the spread over and over and over millions of times a year. They didn't break any laws, but they were faster than you. And it was completely invisible from where you're sitting on the ground floor trying to make trades. Now, that was the birth of high-frequency trading. Before it existed, humans executed pretty much every trade on the stock market, and today it's roughly 50 to 60% of all trades are done through what was then deemed high-frequency trading. The SEC confirmed it, the TABB group confirmed it. Humans became a minority in less than a decade, and here's the part that really matters today. The traders who got displaced weren't bad at their jobs. Their edge didn't erode because they stopped working hard. The structural environment around them changed and they didn't see it coming. And we're living through that exact same kind of shift right now, except this one is way bigger. Now, the reason I'm confident saying this is because this shift doesn't just change how trades got executed. It required a totally new financial system to be built from the ground up to accommodate it. And that's what's happening right now. But the catalyst is AI. So now, before I explain what's actually happening, I want to make sure you understand just how compressed these windows of opportunity really are, because this is the part that most people get wrong. Renaissance Technologies, so they were the firm that initially built all this out, their medallion fund, which averages 66% returns compared to the S&P 10% for 34 straight years. Not for 1 year, not for a couple years, 34 years in a row. Buffett, the greatest human investor in history, averages about 20%. And Renaissance wasn't better at reading companies. They were just smarter about the macro environment and the underlying technology. They were simply the first to understand a new structural technology advantage that made the old game totally obsolete. They got in early. They defined the new rules of how the game was going to be played. They established themselves as the dominant player, and then the window completely closed. Within 5 years of that fund launching, it closed to outside investors. People had 5 years to get in and get those crazy returns. The window for early adopters to ride that wave was only 5 years. There's a book called The Man Who Solved the Market, which documents this whole thing. The numbers are real, the timeline's real, the lessons are real, and most people don't miss these moments because they're not smart enough. They miss them because the change looks forward. It's all new, it's obscure, it's on the fringes, people don't take it seriously, and then they're completely trampled by it. The edges compress, the playing field equalizes, and you no longer have the competitive advantage that you did once have. Early movers see those trends, they act wisely, and they compound their advantage over everybody else. Now, let's fast forward to today, what's happening now, and what are the parallels between those two things. Now, here's the thing that people don't really understand, is very soon there are going to be more AI agents making monetary transactions than humans making transactions. Think about that. Really think about that. Because if you don't fully grasp what that means, the rest of this won't land the way it should. If you're skeptical, consider this. Researchers at the IMDA Networks Institute spent a full year analyzing every transaction on Polymarket, one of the biggest prediction markets in the world. And in a single year, 86 million bets were placed on that. And Polymarket processed over $8.4 billion in trading volume in 2024, up from 60 million in 2023, a 140x growth in 1 year. And here's what makes Polymarket important to this conversation. It built the Polygon blockchain. Users fund accounts and settle all the transactions in USDC, which is a dollar-pegged stablecoin. There's no bank account option. So to participate, you need a crypto wallet. So every one of those 86 million bets was settled in crypto through a wallet on a blockchain. Now, here's what researchers found inside the data. Sophisticated players flagged as showing bot-like behavior extracted $40 million in arbitrage profits in a single year, not by predicting outcomes, but by finding mathematical mispricings that guaranteed profits regardless of whatever's happening. And they did it thousands of times mechanically at a speed no human could replicate without automation. The single top performer ran over 4,000 trades, averaged $496 in profit per trade. You can do the math on that. That's not someone sitting at a screen watching charts. That's someone who built or prompted an automated system one time, monitors it, adjusts it as needed, and the system does everything else. So the regular participants placing those bets, they thought they were competing against other humans, but they weren't. And this really is the high frequency trading story all over again. It's a different platform, it's a different asset class, but it's the same structural dynamic. And academic research backs this up completely. Now, a 2015 study in the American Economic Review showed that in any market where prices update faster than humans can react, automated agents systematically extract value from slower participants. It's not a prediction, it's a documented mechanism, and it's already operating in these markets today. But here's the actual thing. The trading side of this story is just the tip of the iceberg. Well, let me explain what's underneath it, because this is where real magnitude of this shift becomes clear. AI cannot open a bank account. That sounds like a small detail, but it's not. It's actually the structural fault line that makes everything else in the story make sense. So KYC regulations, know your customer, under the Bank Secrecy Act require human identity verification for account opening. There's no legal framework in the US banking system for a non-human identity to hold an account autonomously. This isn't a practical hurdle, it's a categorical mismatch, meaning that the entire architecture of trading banking exists to answer one question: who is the person? And an automated AI agent can't answer that. There is no person. You can't fix that to rebuild the entire foundation of the system. And that's exactly what's happening right now. Less than a month ago, Coinbase launched what they're calling agentic wallets, which are purpose-built financial accounts for autonomous AI agents. And it's already processed over 50 million transactions. 50 million. That's not a pilot, tiny program. That's a new piece of financial infrastructure that's live in real time. And to understand why this matters as much as it does, you need to understand that there are two distinct waves of AI in commerce, in politics, happening right now. They look similar on the surface, but the structural difference between them is enormous. Wave one is that AI is acting as a tool on behalf of the human. You ask your AI to handle a purchase, it accesses your credit card, completes the checkout, confirms the transaction, the AI executes the action, but the financial identity at the center of everything is still yours. Your bank account, it's linked to you. And the AI is just the interface, but there's a serious problem with this architecture, and the problem gets worse as AI gets more capable, because when you give an AI agent access to your financial identity, you've created what researchers are calling a massive attack surface. The specific threat has been named, which is prompt injection. It happens when a bad actor embeds hidden instructions inside content that an AI agent is going to read, so a web page, a product listing, whatever it might be. It can open it and then interpret the instructions as legitimate commands that can do things that you wouldn't want to do. It could accidentally delete a database. It could accidentally send all your funds to somebody else. And this is really, really risky. And this is why wave two exists. Wave two is there's a real structural shift in what's happening. Wave two is, instead of giving AI access to your identity, AI gets its own wallet with its own limited funds operating in its own identity on rails built specifically for it. So AI can only spend what it's been allocated. It can't access your personal accounts, and it can't be tricked into handing over your credentials. Both of these waves are already underway, but only one of them requires rewriting the architecture of all of finance. Now, let me give you the numbers to show you why at scale this opportunity is so different from what we've seen before. Stablecoin transaction volume reached approximately $27.6 trillion in 2024. Visa's annual payment volume is roughly $13 trillion. Stablecoins have already surpassed Visa, not in market cap, but in actual transaction volume. The infrastructure capable of handling AI native financial transactions isn't being built. It's already operating at huge scale. The stablecoin market grew from about $5 billion in 2019 to $160 billion in 2024, which is a 32x in 5 years. And it's growing faster and faster as AI agents are doing more transactions. So this is a shift in scale that does not come along often, and sometimes only once in a generation. Right now is while it's happening in real time. So the question that you should be asking is, what should you do about it? All right, so we're going to go through a framework that helps understand this. The high frequency trading transition created distinct categories of people. There were the builders that actually built those systems. There were the early adopters who were like, dang, this is cool, I should hop on this. Then there were the oblivious, the people who didn't know what was happening, and they didn't understand until it was too late. And then there were the late arrivals, the people who figured it out right around the time the competitive advantage was completely gone, and they were back at the same playing field with everyone else. So the same 4 categories are happening in this transition as well. So the question is, which one are you in? You don't have to be a coder, you don't have to build the infrastructure layer, but you do need to understand what's happening. So the professionals who understand both traditional financial systems and crypto or blockchain infrastructure are a rare combination, very rare. And that combination is commanding significant compensation premiums because the people building this new layer need people who can operate in both worlds. The same dynamic is true in AI security. Cybersecurity professionals specializing in agentic system security and AI red teaming are among the fastest growing and highest compensating specializations in tech right now. The ISACA's 2024 State of Cybersecurity report found that over 4 million unfilled cybersecurity roles existed globally, with AI-specific security expertise commanding 20 to 40% salary premiums over general roles. Because the threat surface we described in the prompt injection section of this video is real, it's growing, and there's not enough people who understand it. Early adopters who really understand that have so much opportunity to create awesome income and really big impact building this new layer. So the window is open right now for AI native financial infrastructure, agentic system design, and AI security, but it's not going to stay open indefinitely. Now, I want to be very direct about something because a lot of people hear a story like this and they either go all in on speculation or they freeze and do nothing. And neither of those are the right move, to be completely honest with you. Understanding the shift matters whether or not you're planning to work in it, because if you're managing your own investments, you need to understand that the counterparties you're trading against are increasing their automated systems. And it's not a reason to panic, but it is a reason to deliberate where you think you have a genuine edge and where you might be fooling yourself, because the $40 million that got extracted from Polymarket didn't come out of thin air. It came from real people who thought they could win, but got beat out by an AI system. So if you're in finance, payments, compliance, software engineering, or cybersecurity, the shift I've described is already reshaping your exact field of work. And if you want to have an edge and still have a role as AI layoffs are becoming more and more prominent, you really want to understand how this foundational shift to the financial system is working. And the professionals who are thriving in these transitions are the ones who are really updating their mental models early and move deliberately and not just waiting around to hope AI doesn't lay them off. So if you're not in any of those fields, the meta lesson still applies. The skills and positions that generate premium income in one era don't automatically carry into the next decade. The floor of traders in 1998 were wrecked. They had to learn new skills if they wanted to compete and still be high earners once that new paradigm shift became a thing. So the question really still is the same. Are you paying attention early enough to move with deliberate intention, or are you going to look up in 3 years and realize the window has already closed? Renaissance figured out the structural advantage, built around it, generated 66% returns for 34 years straight, and then they closed access to everyone who was not an early adopter. The parallel financial system is here today. Agentic wallets are live. Volume being done through agents is skyrocketing. The BIS is writing policy papers about AI to AI transaction infrastructure. Coinbase launched a product category that didn't exist even 2 years ago and processed 50 million transactions in just a few weeks. The builders are already building. The early adopters are already in position. And the only question left is, where are you in that sequence? Now, I've been talking specifically about financial infrastructure and AI systems today, but the underlying dynamics here apply to your career and your income in a direct and practical way. We already see labor markets shifting structurally right now in ways that most professionals are underestimating. And it's the same way that the floor traders underestimated high frequency trading, the same way regular Polymarket participants didn't realize that they're trading against automated systems. Remote work has fundamentally changed what companies will pay for talent and where they're willing to find it. AI has changed which skills are scarce and which are becoming commoditized. And the professionals who understand how to position themselves clearly in this market and who know how to actually run an effective search are landing roles that pay dramatically more than what they're currently making. Now, most mid-career professionals are running their job search the way those traders were running their books in 1998, with tools and strategies that worked in a different era against a market that has already changed around them. If you're serious about making a change, here's what I want you to know. Whether you're looking to land one job, stack remote jobs, or just create financial stability for you and your family, we at Elevated Tech have a few spots to do done-for-you job search for professionals with at least 2 to 5 years of experience. We run your job search, we write your resume, we send out applications, we do interview prep for you, and that's 2,000 applications going out per month. So in 90 days, 6,000 applications going out, and for many people, we even do guaranteed placement as long as they show up and do the work. So if you want to see if you qualify for our done-for-you job search, click the link below, book a call, and we'll see you there. And all this works because we understand how the market has changed, and we know exactly how to position mid-career professionals inside it. And it's ultimately not for everyone. There is an application process because if we're going to offer conditional guarantee for you, we need to know you're going to do the work and we can get you results. But if you do want to find out if that's you or not, click the link below, book a call, and we'll see you there. Even if you're not a fit for a guarantee process, we have an awesome automation tool that can run the entire process automated at a fraction of the cost. See you there.